Good morning, traders. Welcome to Admiral Markets. My name is Chris. Today's focus is going to be on the markets and the charts, and we're going to take a look at the Forex commodities stock indices in just a second. If you follow Twitter, please check us out at Admiral Markets and at Chris Forsick. First, be aware, though, that this webinar is shown to a global audience. Please take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if it is suitable for you and other details. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. So typically what I look at when reviewing the markets is my triangle of analysis, looking at momentum and trend, first of all, then looking at patterns like chart patterns, for instance, but also divergence patterns, fibs. Then I look at the support and resistance. So that's the triangle of analysis. And then I basically analyze which pairs and instruments are interesting for that week or day, sometimes for the month. And then if that is, if they're interesting, then I put them on my, let's say, the short list, and I keep an eye on whether they are reaching my decision zone. So first step is analysis. Second would be then, if I do think it's interesting, then I look at, okay, what is the path of least resistance probably for this pair? What decision zones do I find interesting? What am I looking for in terms of trigger? What kind of confirmation signals am I looking for at those zones? Alrighty. So let's take a quick look at the calendar. Well, we all know probably, at least for those that watched the webinar yesterday, we're talking about the expected impact of the U.S. presidential elections on the market. So that's today. It is still early in the U.S., so I don't think, I think that in a few hours from now, those voting places, polls will, polling stations, I should say, will open. There has been already some early voting in, I think, about 37 plus minus states. Early voting was allowed. In some places, early voting was allowed, and then the last few days before the election, not anymore. So it does depend from state to state. So some results are already, been noted. The remainder of those that want to vote can do so today. And different states have different ending times of those polling stations. Obviously on the East Coast, they will tend to, there's 3 hours difference between the East and West Coast. So the East Coast is going to finish a bit earlier on average than the West Coast, obviously. But on the East Coast, you have also some very interesting swing states that will decide, how exciting, I guess, or how close the race is going to be. On the East Coast, you have Pennsylvania, you have Florida, you'll have Ohio, North Carolina, Virginia, New Hampshire, and all of those are going to be interesting to see what those results are. Michigan, so those will be coming in relatively on the beginning of the evening. If it's still close, then I guess we'll have to wait till Colorado and Utah and Nevada, I guess, before we see more, closer what the end result could be. Now, besides that, that is the main event today, but you have your usual, events for today as well on this Tuesday, like balance of trade and some pound news on manufacturing and industrial production. Some Fed speeches there as well. So you can find out all the details by going to analytics and clicking on this Forex calendar. All right. So good morning, An. Good to see everyone here. So what we were saying yesterday already, depending on who the winner is, how the winner wins, there could be some volatility in the market that corresponds to all of those news events, and maybe not in the way we expect, by the way. So that's something we want to be careful of. Let's see. Craig, good morning. Wouldn't miss this one. Yes. uh, that's yeah, it depends how you look at it. I'm not sure how you mean it, this particular sentence. Some want to miss these kind of movements because it's highly volatile, and therefore, it goes with the news. So many traders do not like that, including me, myself, by the way. Iron is asking, could you explain a bit of the strategy of looking at daily candle closes? Yes, we can. Yes, that's very true. It's if you like, it all depends on your personal kind of style and what the amount of risk you like, the amount of action you like, perhaps in a way. Some traders definitely are more speculators, or all of us are speculators, but how do I explain it? Are more risk seekers in this regard. They are more willing to speculate in times of uncertainty. Maybe that's the better way to say it. So yeah, if you have a character like that, then this is an event you're looking forward to indeed. So yeah, euro dollar at this moment bouncing off the 38.2 fib. It was a bit of a decision zone here, I guess, considering the prices are going sideways like this. Now, I think that it's a pretty, let's say, interesting environment, because this could still be a zigzag like this, for instance, up to these targets, and then that could complete a bigger triangle on a daily chart or weekly chart, and the downtrend might start, right? If price is hesitating to break above these levels right in here, I would say, maybe the R1, or let's take a look at the hourly chart. Here, this R1, you could see already the potential perhaps for a head and shoulders here as well. That could be something to watch out for, because then there could be a bigger move down like this, and we can see maybe an ABC zigzag down like that, for instance. All right, so in this regard, I would not be surprised to see a bounce, or that doesn't have to be a bounce. Could have been a breakout here as well, down to the 50 fib. That's what I was planning to tell you guys. Watch out for a break or bounce, and break below these lows, basically, for a move down to the 50 and 110. If it breaks below 50 and 110, 109.60, then 109.10, and it could ride down these fibs, basically. If it does bounce at the 38.2 fib, one way is to wait for this 4-hour candle to complete. Then we have two bullish candles on the 4-hour chart, and I think that on a 50-minute chart, it will be okay to basically look for kind of a bull flag like this. At one moment, there's going to be a turn here. There's going to be a break, kind of a hook back, and here there could be that potential to trade that upside to 111, 111.25. We're talking about pretty tight zones here, so it's all kind of an intraday ideas. I guess this pair will move at least a bit technical, because there's a lot of time until we get, let's say, the first results, or expected first results. So that is probably going to be 12 hours from now. So price is going to make some movements in those hours. Question is how much. What could happen is that price really starts to slow down. It doesn't have to be, but it could. How likely is it? I really think it's difficult to make this assumption. I think that it also depends on what kind of maybe polls we still get, and what kind of news events, maybe speeches. It's turning into the morning slowly but surely. It's 3 a.m. Well, it's still night actually in the U.S. 3 a.m. It's there. So a few hours from now, let's say, there could be some footage, or still some speeches. So this is the type of trading that you are kind of going to be vulnerable to the fact that the price might slow down and speed up, just based on all this political kind of data that is occurring. And that's kind of annoying for those that like technical analysis. to be honest. But that's what happens once in 4 years, so there's nothing much we can do about it. Technically speaking, if that would be the only thing kind of out there in this trading universe that I would be able to look at, then I would say 50-minute chart. Let's see if price can, it seems like it's going to hit the pivot point soon. That should be respected most likely. If there is a bit of a correction here, but then a bounce, I think weakness in here on a 5 or 50-minute chart like this, kind of an inverted head and shoulders down in here, should give us that jumping board to the upside to make maybe a bit of a zigzag here. And then we'll have to see how price responds here. Is it, as Ned said, if we break this top, there could be an acceleration, and that bigger zigzag could occur like this, looking at the blue. If it fails to break pink, we might get the opposite zigzag like this. So I don't have any preference for, I think both are equally likely. So from a trading perspective, I think that this zone is possible, that this zone is possible. And if there is a bounce, then in that case, this zone is possible. That's how I see the charts. And my decision zones are basically looking at these two bullish candles. That's how I will use candlesticks, because our topic of today is actually candlesticks. So I will use two candlesticks here to give, I think, a pretty good confirmation of there's a pretty good chance of a bounce in that case, in my view. I will see how price responds in here to make that judgment too, bounce or break. All right, even if price makes a zigzag like this, then 50, 61.8 could still be bouncing spots. Because ultimately, to me, the structure looks like this is part of a correction, and it looks like we're going to have a bigger zigzag like that before price moves down. So let's see. I don't know what kind of, some political events might change that. This might not occur because of that, but this is how technically it looks like a zigzag to me. On the pound USD, it looks like the same thing is happening. Two bullish candles already. This could be the third. A couple of bullish candles. So this is already qualifying as a bit of momentum. It is hitting the pivot point. So once again, in my view, 50-minute world, this is, I think, an environment where if it makes kind of a bull flag here too, waiting for kind of inverted head and shoulders there, and the weakness on the right side could be a good bouncing spot. Alternatively, I'm going to wait till how this price responds to this pivot point, basically. We're going to have London open in 1 minute. So let's see how the pivot points shape out in that case. But generally speaking, if I want to see how price responds here, because if it does react with a lot of impulse here and it does start to move down like this with good momentum and then starts to make a bear flag, then obviously I become bearish. So it all depends, simply put, it all depends on the reaction here. From a technical point of view, once again, it does depend on the reaction price will make at this pivot point. Okay, but the candle is bullish, so I think that at this moment, a bigger upside seems more likely. Dollar yen is making that bull flag, talked about it yesterday, that we'll probably see a push, but then we should see some kind of bull flag arrive, and that's what it's doing right now, in fact. Now, is this flag over? We got 4 candles now breaking this low. So there's a good chance now, I think. Here too, this is kind of an inverted head and shoulders that I was talking about potentially for the pound and the euro and dollar as well. And it seems to be building on the dollar yen. Now, so from that perspective, it's definitely possible that this is already finished. 4-hour chart. We do have 2 bearish candles. That's a bit worrying here. That's the 5th candle. So if it does break, I would like to see it probably break soon. Otherwise, it might just expand further. So I would probably not trade it as yet, unless someone manages to get, to catch it here. Then moving it to break even is fine. If not, then I would probably wait for this push up to occur, then wait for a hook back here on the 5 and wait for a bounce here. So do I mainly watch 5 and 50-minute charts for flags and patterns? No, I look at, these are, if I'm looking for basically an entry, then sometimes I do use chart patterns too. But I mainly use candlestick patterns and time patterns for entries. Chart patterns I more use, well, now I was talking about a head and shoulders, but that's more like a confirmation than the actual kind of signal, right, or trigger. Chart patterns chart patterns I think are a bit more valuable for me as an analytical tool on higher time frames, probably on an hour or higher, but probably across the board, I look at chart patterns in general. Yes, as a confluence tool, I look at flags on 50-minute charts too, right? But they're more like a confluence. Good. Let's see. WTI. So we take a look at that. Let's do it right now. Question about oil, if it will fall to 42.70. Okay, this looks very, very big momentum at this moment. And let me clean up. All right, good. So big momentum here, and I would not be surprised to see price continue with that momentum lower indeed. All it needs to do is retrace a bit, make a bear flag with what it is doing right now, in fact. So all right, this is in a way a bit of a rising wedge, but it could expand to a flag as well if it follows the parallel line like this. So anywhere R1 or R2, there could be definitely some turning spots there. I would think there's a good chance of that. Let's see. On a 4-hour chart, probably would be the best because now we're having higher highs and higher lows. If it does like that and we see a bearish candle here, or we see 5 to 6 candles not breaking the high, then we could see the move down like this, I think. So I would probably still be patient and let this I think there's a decent chance it could still make that one more move up. Now, if it fails and price breaks through pivot point and the support trend line hits the S1, maybe, hits the S1 kind of like this, and then starts to build a bear flag, then there's a good chance of a breakout, and price might not get that high. Price might not retrace that deeply. For the moment, this is what I would expect, the deeper retracement, and I would be looking for a turnaround there for downside. But if it doesn't, and price moves down like this and then starts to build a flag, then it might not happen at all. All right, so pound has a new pivot point at, let's see, 124.14. It's above the pivot point at the moment. All right, which makes sense. As I said, it has shown a big push up. Now the target of that downside, by the way, on oil, if you look at the weekly pivot points here, S1 is 42.10-ish. If we put a fib perhaps from, let's see, from here to here, for instance, maybe from here to here even. The 38.2 fib is 45.86. Now 45 is the 23.6 fib. Target is 41.60. Now the main question was, is it at a bouncing spot actually? So I'm not sure whether Eglis meant bearish or bullish bouncing spot. Probably he meant bullish bouncing spot, I guess, because price is at support. And so from that perspective, yes, it's possible, but I think that the momentum here is too strong at this moment. It might bounce, but what I would like to see before it makes a bullish bounce, it would have to basically show weakness 5 to 6 daily candles, not breaking this low. That's the first time I would consider that a bullish bounce has some validity. Otherwise, I would still probably expect it to go lower indeed. All right, and this could be a bouncing spot too. There is a bearish bouncing spot either here at the 23 or 38.2 fib, in my opinion. All right, now I know that's different than I was saying here. At this point, I was bullish, and I expected to follow through, and it did follow through, but it didn't break this top. And that's, I guess, surprised me a bit that it didn't break, but those things can happen, double top. And the momentum that we saw after that was very, very strong. So this basically, you can see strong daily candles. So this leads me to believe that more downside, I think it's still likely, unless 5 to 6 candles fail to break the low. So let's talk a bit about, we looked at some of these majors and oil now. Let's take a look at gold. I was bearish on this. I have changed my opinion due to the fact that price is broken above the 38.2 fib. You can see here, price stopping at the 38, making corrective motion like this. I was waiting for the break. The break never happened. Instead, it broke above the 38.2 fib with momentum. That's a game changer in my view. All right, so Nenad already talked about it, that gold could rise. And he showed his analysis yesterday. For me, this momentum break above the 38.2 fib totally changes the equation. Until then, we had a bearish sideways movement that is very typical for wave 4 price. Stopping at the 23.6, stopping at the 38.2 fib, respecting those, moving choppily. Exactly what I expected, but the bullish momentum break, instead of the bearish break didn't happen, and bullish break happened with momentum. So something else I think is going on, and I think what's happening is that this correction now seems pretty likely that it has been completed. Price stopped at the 38.2 fib, so I think there's a good chance that this has just been a correction of this upside indeed, and there's a good chance that price might find support for a move up. All right, now nothing is cast in stone at this moment, and I will keep an eye on how fast this moves down. If there is a lot of momentum, that could change the ball game again. But as long as now it doesn't seem to be so. As long as if it makes any triangle here, then it's definitely looking more bullish at, the structure. At this moment, if we see 5 to 6 candles not breaking this low, we got already 4. This is the 4th. Then there's a good chance of a hook back and bounce. All right, so there are a lot of instruments we can take a look at, but first I want to take a look at Iron's question, because he was asking if I could explain a bit about analyzing daily candles and then the closes. So basically, we can look at candles, basically any candles, and there's a lot of info there to be found. All right. So basically, we have the size of the candle. If there's a relatively large candle, it does give us more information because there's more participation in that candle. That's why NFP days are often more important. Well, first of all, because it's NFP, so there's a lot of participation, but also those candles tend to be bigger. And it will give us indication of a master candle, momentum candle, because if there's a sizable candle, then it has usually a bit more importance. A candle like this, for instance, this small candle, right, doesn't give us really a lot of information. But a candle like this, about 3 times as big, gives us more information about the strength of that move. Big candle. All right, so typically more important, gives us more information about its potential. The second thing is the close. A candle close near the high or near the low indicates strength, or at least it indicates control. So if it closes near the high, it indicates strength. If it closes near the low, it indicates weakness. It indicates that the bears are in control or the bulls are in control. So that's basically what it is. It's control. And we can judge whether one side is in control by monitoring those closes. One of the other things we can look at is wicks. Wicks is the opposite, is lack of control of one side. All right, here's a big wick. That means the bulls had no control. Here's a big wick too. That meant that the bulls had no control either, right? And maybe not the bears that much. The bears you could question because it still was a bullish candle, of course. So this candle leaves little to doubt because there's a wick, so bulls are not in control, but bears also are in control because the candle closed near the low. That's the difference with this one. Both have a wick, but one is a bearish close with the close near the low, the other one is a bullish close. The left one is obviously bearish. The right one is definitely not bullish, all right, but it's not a massively strong bearish signal either. In that moment, context would probably be very important too. Then other things we can look at are, for instance, candle closes and highs and lows in relationship to previous candles. So if you got momentum, what you'll typically see is candle lows to the upside being higher like this. And you'll see a series of bullish candles like that. With downside, you will see candle lows often being lower. Not always, you see here 2 examples, but typically yes. So that's how you can measure momentum too at the same time, by looking at the candle lows for bearish and candle highs for bearish momentum and candle lows for bullish momentum. What else? You can look at candle closes versus previous candle closes, right? So let's take a look at, for instance, let's see. Yeah, here for instance, you have a couple of examples where the candle closes are below the low of the previous candle, like this. So that adds extra dynamic to it if the close is lower than the previous close. If you don't have it, let's see. Let's see if I can find a good example. Not really at this moment, but well, I guess here obviously you have candle highs that are higher than the previous close, and it gives a series of bullish candles. But that's pretty obvious because they're bullish. All four of them are bullish, um, so that might seem logical. But also, besides the fact that they're bullish, the candle closes are all higher than the previous candle closes. So, one of the things I was looking for basically is a bullish candle like this, and yeah, we don't have gaps, so you probably won't see it. The candle close being, it has to be bullish, yeah. Okay, doesn't matter. So here you see a series of bullish candles, for instance, obviously because they're all bullishly closing above their open, and the series of closes as well, plus the series of highs, but not the series of lows, but not a series of highs. There are two exceptions here. So that's why I use the time factor pattern for the exact reason, because one of these highs not being higher is not really dramatic. It does tend to be more dramatic if 5 to 6 candles do not break the high or do not break the low. So that's why I don't pay attention to many times the highs in upside or lows in downside, but I do pay attention if it doesn't happen in 5 to 6 candles. So time factor and candlestick patterns are intertwined like this and related to each other. So this is the information we can read from looking at candles. Now, what I like to also, one more thing by the way, is to look at two candles. So if we have momentum to one side, a rule I use is to look for two candles in the opposite side. That indicates often a bigger correction, a pause, a kind of a moment where price is showing some struggle. All right. Now that does not necessarily have to mean that the downside trend is over. For that rule, I use 5 to 6 candles still, but it is the first indication that a bigger correction or a reversal could occur. One candle is not something I'm overly concerned with, especially if there's momentum apparent. All right. So here you have also one candles within that upside momentum, even here. So from my perspective, this is still on the daily chart, still a pullback. Although we had a bearish candle, it is still a pullback because there's only one candle. If today's candle is bearish, then it's a different story. Despite the fact that it's a pullback, yesterday's candle was bearish, and therefore one might still want to be aware of the resistance at the candle's high. So this is how I look at the daily chart. For me, the momentum is still the, let's say, most important factor at this moment. On the weekly chart, we see two bullish candles with candle closes near the high. That too shows a bit of a bullish environment at the moment. On a 4-hour chart, it would look like this. This bullish momentum that we saw on the daily chart, those two bullish weekly candles, this is basically how it looks like on the 4-hour chart. And one of the first moments that I was looking for a continuation was, let's see, somewhere upon the break here, if I remember correctly. One of the reasons was that 5 to 6 candles, you had a bearish momentum here. 5 to 6 candles not breaking this low occurred somewhere in here, and we had indeed a pullback and continue. So here you see bullish candles. That's all confirmation of upside. Then we see a bit of retracement. And then again bullish candles here, and then again a bullish candle. Those are all confirmations of upside continuation. All right, at this point, I would be cautious that the bigger retracement could occur, and here too. Anywhere where there are two candles, basically I become a bit more cautious. But it is right away invalidated if one bullish candle occurs like this. Engulfing twins, for instance, then it's right away bullish because we have the momentum here. All right, we do have two candles bearish, but because of the bullish engulfing twin right after that, it could easily be a continuation of that bullish momentum. Do you see that? So, momentum, important. The momentum stays in effect until we have two candles of the opposite side. Then it's a first indication that there could be some struggle, unless we see a first bullish candle again. Then there's a good chance of continuation, like we saw here. The 5 to 6 candle rule is apparent, is valid though. So from my perspective, here I would again be cautious. Because 5 to 6 candles have passed before this high is broken. That cautiousness will be again out of the window when we have this candle breaking through that high. All right, and then we get a good upside and a good momentum. All right, so here obviously there's a bit of caution again, and here too. Now eventually you'll get divergence, and you're going to eventually see price hit bigger resistance. So those two combined will make it happen that a momentum like this will start to fail, and we'll get a bigger correction of this entire 4-hour upside. What happened after price retraced to the 38.2 fib? Does this make sense? So let's take maybe one more example on 1-hour chart. This is how you can use candles and swings basically. All right, so here we have bullish momentum. Why? Well, first of all, the first indication of a turnaround is these two candles, right? That's the first time we're hesitant. Then we get a bearish candle. We're still bearish, but then 5 to 6 candles do not break this low, and there could be a bigger correction or reversal. So that happened here. Then we get two bullish candles plus the 5 to 6 candle rule. So this is starting to increase the chances of an upside right there. All right, so we get a series like this, continuation here, and then a continuation here, and we got all the bullish candles like this. Two bearish candles, first moment that we're cautious. 5 to 6 candles not breaking the high happens. Well, these are not two candles in a row, so actually scratch that, but 5 to 6 candle rule is right here, so that candle will be indicating that a bigger correction or reversal could happen back to the downside. All right, so that basically concludes that swing high, swing low that we saw, and which we knew or were aware of that could happen with more confirmation from this point. So we get some bearish candles. Bullish candles remain small. We don't get two bullish candles. The first time we get two bullish candles is here. Now, there could have been already some warning of that, considering the fact that this was a pretty strong engulfing bullish candle with the candle close near the high, a very sizable candle. It's a candlestick pattern as well. Plus, if you might look at the larger time frame, you could see that maybe this momentum is still overriding, and this could be a correction. All right, but that's assuming we're using multiple time frame analysis and we spot this. If we don't spot it, very simply, the rule states 2 candles. So this is the moment where even if we wouldn't see it on the first candle, we would then see it on the second candle, and we would consider there's a good chance, the first warning sign that this might be over. 5 to 6 candles would be basically somewhere in here. Now, that would not be a good moment to go long because you can see prices, first of all, at the top of Keltner, for instance, but it has been moving up, only up and up and up. So that sometimes is it could happen that it's just an immediate break. Often enough, you get pullbacks, as you know. So we get the pullback, 2 candles here indicating that the bearishness is some bearish correction might occur. 5 to 6 candles occurs here as well. So yeah, basically 2 bullish candles at this moment right there. So that's basically indicating the moment where, okay, there could be the continuation of the bounce that we saw here, and there could be that continuation. So that was the first signal. Obviously, that's a breakout candle 2 breaking above the Keltner, not only breaking above the Keltner, but breaking above very close, a sizable candle plus a candle close near the high. All right, so that could be another way of looking at the breakout instead of the pullback here. So you might wonder, yeah, but why look at bullishness? Why could this not be basically the main trend? This could be the pullback, and this could be the start of the downside. All right, and theoretically that could be possible, actually, right? But we do have to keep an eye on some things. First of all, the momentum to the upside has been stronger. And we can simply see that by counting pips and dividing it by candles. This is a lot more corrective. But we can look at the oscillator. That's why there's an oscillator. And we see that this is way above the zero line and this is retracing back. One of the advantages of looking at an oscillator, we can see that the environment itself is bullish. If we look at this part, yet again, more bullish than this part. So one of the reasons I was looking at that time at fib bounces in here, right? There are 3 fibs, 38, 15, 61.8. I was looking for bounces. Then later on, I was looking for a break here of this correction, right? So that also was indeed the breakout trade that happened. All right, now, what if someone was bearish? Let's say we just ignore that. There were good reasons to be bullish. I myself was bullish, and this was all pre-fact and live. But what if someone was bearish and did the analysis somehow the opposite way? Well, if we use then candlesticks and time factor, I think that still there was sufficient warnings of invalidation. What would have been the invalidation? These 2 bullish candles would have been the invalidation. These 2 bullish candles would have been the invalidation. And this one too, but the last one probably would have been too late to reduce risk on any trades. 5 to 6 candles would have been also a bit late here, and a bit late here because price already pushed too far. But those would have been invalidations too for downside. So I'm not sure if I'm making any sense to some of you. Hopefully I'm making a lot of sense to most of you. But if not, please ask some follow-up questions if you want. Dogan has one of them. You start to count 5 to 6 candles at the end of the big movement. Basically, you can count 5 to 6 candles anytime you want. We could do it right now if we wanted to. All right, so at this moment, we have a high. So that means we're at 0, right? There's literally, right now, there's been a high. So there are no candles not breaking the high. So upside is 0. Now, downside is basically 0 too, because we have a higher low. So if we look at the most recent bottom, for instance, here, that's where we have a low that is basically sticking out, right? And then count to the right. We have 1, 2, 3, 4, 5, 6. 6 candles above this. So that indicates basically that fifth candle, right? Fifth candle right here. That, well, this, we cannot really count this as a swing high, swing low, actually, but if we wanted to look at it that way, that this is over in a way, which doesn't seem that surprising perhaps, but this candle did that confirmation. If we look at this swing high, swing low, because we're having, in this part, we have continuous lower lows, lower highs within 5 to 6 candles. Yes, we did have a bit of a bounce here, but 1, 2, 3, 4, fifth candle still breaking, sixth candle breaking. So when did that finish? Right here, there was the sixth candle. So at that point, there was a good chance that this swing high, swing low was finished. One of the reasons why we might have, there was a good chance of a bounce in here. And the two candle rule right here appeared after the failure to break this low. So how about the opposite side? Here is a high. We have basically 5, 6 candles not breaking that high as well, right there at this point. But then still we got the break, didn't we? We still got the break. So, it's not a holy rule. It's not something that always works. Sometimes you do get breaks between 5 and 13. And this is an example of that. So why? Well, partially because it was Asian session. Now it's European session. So price is going to be a bit more expandatory. It's going to start its movements, right? So this can happen, and sometimes you do get breaks earlier. Like for instance here. Right, we had the break to the upside. Previous when we were doing this analysis, and you get continuous highs, higher lows, higher closes, with the exception of here there's one bearish candle, here there's a doji, here there's a bearish candle, here you have two candles, but ultimately you get right away a bullish candle, so that's a continuation sign. Here you get a bullish candle, a continuation sign. 5 to 6 candles, though, does come into play around here. Does it continue? Yes, it does on candle number 9. So, yeah, it's not a perfect rule, and that's why it's good to keep an eye on other factors too. And in this case, probably one of those factors could have been the fact that this was strong momentum and this is going sideways. So it didn't really look like a reversal movement. Also, having strong support resistance is important. That increases the likelihood of a reversal. In this case, for instance, we had the fifth candle here. It didn't break the high. Sixth candle was bearish. That signaled a decent correction throughout that day. Intraday trading, we had a pretty decent bearish retracement on the euro dollar that day. So we can, why don't we choose a pair? I don't know. How about I don't know, euro yen, or let's take a look at the 4 hour maybe, I don't know. Doesn't really matter that much. Let's go back in time a bit to, I don't know, 2 years ago or so. All right, let's see. All right, 1st of October here. There we go, 2 years ago. So, only looking at this piece, of course, normally we'd have a bit more information like time frame, multiple time frame, and support resistance levels. We'd see a larger part of the chart as well, get a bit more information regarding patterns as well. But just based on candlestick patterns, we see basically some strong bearish candles, but now we see 2 bullish candles. So let's see, not necessarily any trade that I would take, but from this point of view, we're, I guess, in a neutral kind of territory, because we do see some bearishness there. We do see bearish candles here on the left, but we also see 2 bullish candles. Well, that's actually bullish, bearish, bullish. So probably if we see one more bearish candle, it could be a continuation of downside. Let's see. This is a doji. That's a bearish candle. Now that bearish candle is quite far closed from the low. So it is a bearish continuation. We talked about that this could just be a consolidation for more downside. But this candle maybe not that great. We got a bottom in here. I would say let's just wait for the next candle. Yeah, the wick giving us some signal of a warning, and indeed a bullish candle appearing. So we're back into just waiting. Now I got 2 sturdy bullish candles in a row. So that could be an indication that a bounce is happening. So based on this, it could be so far no trades, but based on this, it looks more bullish at this moment. And maybe look for a bit of a hook back. See if we get it. There's a bearish candle again. This is candle number 4. So let's see what the next candle is. It is bullish. That's candle 5. So there I think there's a good chance of a bounce. So just based on this, so let's see if it could retrace. Put a fib from here to here. If it could hit maybe the 61.8 fib. No, it doesn't. Should have maybe just took in the entry right there, but could have been maybe a split entry. Didn't think about it. Anyhow, if we would have taken the entry right away instead of waiting for the 61.8 fib, it would have been around the 38.2 fib entry, or around the candle close here. And price is going our way. We got 2 bullish candles, a bearish, a bullish, a bullish, nothing to worry about, a bullish, a bearish, and that looks pretty strong. We got a wick, bearish candle. Now it's only 1 candle, but it is also a very significant candle. So if I would be in the long from this candle that we talked about, right, the 5th candle not breaking this bottom, then I would move the stop loss to below these lows, probably below this low at this moment. All right, so that would lock in some 60 pips. We got taken out for a win. Sorry, it's Dutch. We got now 2 bearish candles. This one's a bit of a doji. So I would still wait. Again, a doji, a bullish candle, bearish, just going sideways. This is candle number 4. Let's see what the next candle is. Candle number 5 is bullish, with a bit of a pin. So yeah, we got out, remember, on this candle. Now we're waiting to see for continuation signals or for reversal signals. This does look like a continuation signal to me. It's a big wick at the bottom, bullish kind of close, near the high. So could be an okay signal there as a continuation. We do see momentum still riding to the upside here. All right, so I still think it was okay to trail it and exit, because we don't know how this downside would develop. So now we see that there's a chance to re-enter perhaps on this candle. So I'd say probably worth it to try that. Let's see how it goes. We have a bullish candle but with a wick, so maybe just going, if we want to be a bit more cautious because we know that this is candle number 6 and it has a wick, that could be a weakness. This could be a hook back for more downside. I would therefore definitely move the stop loss below this candle low, and the risk is only a couple of pips. We won 60 pips on that first trade. The second is losing 7. We get a continuation, fine, so we can move the stop loss below the candle low, lock in, get break even. All right, that's a bit of a doji. So at this point, we have a continuation. We're up in profit in the second trade, and we're about 62 pips in profit at the moment. But we have a small candle, and it's a doji. So this is, I would say, depends on your psychology. The risk was below this candle low, and the stop loss was about 54 pips. So we're looking at a one-to-one trade if we trail it below this candle low. It is definitely has its validity to do that. I lock in that profit, and it's at the ball, it's at the Keltner, it's at this high, and there was quite an indecision today, or in this 4-hour candle, I should say. So that's definitely a valid method. The other could be just to leave it here and see how the next candles develop. I think both are equally valid. I don't think one has the preference of the other, and the other option could be just to split the trade in two, take half profit, leave the half on. So we get another bullish candle, another small candle though. That might tempt more people to move the stop loss below those lows. Equally valid. All right, then we get the bearish candle. We get taken out for those that moved it, for those that took half profit, for those that are partly in or fully in. That's a bearish candle, but with a wick. This is candle number 9. All right, so I would say probably, yeah, there's I would say moving the stop loss to below this low makes sense. Maybe even taking some profit as the candle closes right at the exit, about 40 pips. And the rest, if there's anything available, still gets knocked out there. 2 bearish candles indicates kind of a double top. It indicates the end of this momentum to the upside. I'm not necessarily interested in shorts yet, but let's see. All right, this is a wick here. All right, we get another bearish candle, but a wick at the bottom. I don't see any particular trade that I'm interested in yet, personally. This is candle 1, 2, 3, 4, 5. So now we know that this high is finished, completed, doji at this moment. So let's see, maybe put a fib on from here to here. Could be interesting to see if we get a retracement to the 50 or 61.8 fib. It might continue lower right away, but that's the risk I'm willing to take in this case. All right, we get the retracement here towards the 38.2 fib. Some dojis. I think there's a good chance maybe we could get a bit more correction. Yes, we do. That's actually a bullish candle. And that bullish candle changes the dynamics a bit. That's a strong bullish candle. So I would not short based on that candle. That's why there's a difference between pending orders and market orders. Pending orders, you're kind of stuck at this moment. Pending orders, I would be waiting after this candle. 2 bullish candles now. If we get a bearish candle in the next one, I might reconsider and take a short. So that's the bearish candle. We got it. Let's see, 1, 2, 3, 4, 5. That could be worth it. Taking a short here. Has a hook back. It's quite choppy, let's face it. It is ranging at this moment. Based on candlestick patterns, that might be worth it. So I would like to see an immediate follow through. Otherwise, I would be very cautious, very scared, and I'm scared now. So that's a bullish candle. It didn't get the follow through. That wick is something I probably missed here, but that's okay. That can happen. So this is not looking good at this moment, and I would try to get out at break even if it happens. Let's see, I didn't talk about the stop loss though, but I would have used the candle high. So this one ended up for a loss. So 2 wins, 1 loss. Let's see how it continues. All right, I'm going probably a bit too fast now, but we had 2 bullish candles. That could have been the signal actually. 5 candles. This was candlesticks, not breaking this low, so I failed to recognize the turnaround. But good candles now, breaking, so that shouldn't worry us. That 1 candle, 3rd candle, 5th candle, but still looks like it's sideways. This could indicate a bit of a correction here at the moment. All in all, it looks corrective though. So what do we have here? We got bullish momentum to the upside. This looks like a pullback, and this could continue higher, right? We have bullish continuation here, bearish pullback. This is the first bullish candle, so it looks like it's going back to a fib, 38.2 fib. So this could be the continuation of that bullish impulse we see here. We see basically 5 to 6 candles not breaking this high, so preferably I would like to see 2 bullish candles. Now this one is a doji, so bullish candle, bullish candle. Now we got it, so that is a better moment I think to go long than with this doji. So let's try that. Let's see how that goes. Bearish candle, bullish candle. So at this moment, maybe good to go with the stop loss. It was below this bottom to reduce the risk and go below this low, taking at least some risk off the table. All right, we got a bullish continuation. We can move the stop loss a bit further again. And at this moment, I think the trade is about half now, I guess. I would keep trailing these lows, to be honest. And that's it. So a lot of indecision, didn't go anywhere, and there was about 15 pip versus, about a third loss there. Didn't go anywhere. Now we got 2 candles again, so it could be a good moment to re-enter. If, I don't know, we'll see 5 to 6 candles. This is posting a new high. Might be worth it on the retracement. Oh, that was probably a big news event or something like that. So, yeah, that's something we don't know. This is 15th October 2015. Who knows? This is a massive candle. All in all, this is candle number 21. So it could have been a bearish, could have been a bullish breakout. 13 candles or higher is typically the best. So that's somewhere around here. So it was perfectly fine to look for continuation. One thing though that we might have seen is this kind of like slower bullish kind of pattern that I didn't look at, that we were only looking at candlesticks. That could have probably been one clue of the bigger zigzag that has occurred. But also, if this probably was a news event day or news event moment, I should say. It's a 4-hour chart. So let's take a look. This 5 to 6 candles not breaking this high would indicate the end of that momentum. We have 5 at this moment. So it looks like there's a bigger bounce coming up, and indeed, we get the bigger bounce. You see 5 candles. The 5th one is the wick, indicating that this kind of push down is over. And indeed, that was the confirmation of that. We got a bullish candle. 1 bearish candle shouldn't be a harm. Now we're getting into some consolidation though, and it keeps correcting lower. We got 2 bearish candles, 5th candle. So this correction seems to be over at this moment. and we might see a follow-through of that. Small candles indicating, I think, still a correction as long as price stays below this high. All right, and we got the turnaround. Fifth candle breaking, not breaking this high, was this fifth candle, and also breaking through this high. So yeah, there was a lot of twists, ups, twists, and turns here at this venture on this chart, as you can see. But it helps with understanding that here we get a bounce, here we don't get the continuation, and what else in the past? Here we're getting a bigger correction. Here we're getting a bigger push. Sorry, I went a bit too far. Anyhow, I speeded up a bit too much, so we see part of it now. But this swing high, swing low here, first indication here and here that this upside could be in trouble, and you get some bearishness there. So finally get a down move, but this is taking quite long. So I think I lost some of you already in the meantime. So, but that's just that was a bit of a choppy area. I personally don't use it that rigidly. These two ideas. What I do personally is use candles and time factor at moments that I think make sense, at moments where I expect the trend to continue, where I expect a reversal to occur. That is basically only when I do my analysis first, when I look at trend resistance, momentum, and patterns, and I make that analysis, then I make a judgment about if I like the pair, and then I look at where the decision zones are, the key decision zones, and I look for triggers at those key decision zones, if I like it. Those triggers at key decision zones are candlesticks and time factor. Those are triggers for me at decision zones. What we just looked at we would be basically like looking at it as a market maker. We would be constantly in the market, which is luckily we don't have to do that, right? So we can make that. That's why we have an edge, or we can get an edge by waiting for moments where there's a higher probability, moments where we can look for price to get into key decision zones, and then wait for those triggers to play out. The triggers I use a lot are candlesticks and time factor and fibs. So that's the advantage of waiting for those decision zones. Candlesticks, however, always have value in getting info. It is a story, basically. And it's interpreting that story when you look at the candles and the sequence of candles, and you look at the candle closes, and you look at the size of the candle, you look at the highs and lows. It's interpreting the story, the psychology behind price movements. That's why candles are so powerful in all cases. Anytime you look at a chart. For me specifically, I use candles very much for triggers. But sometimes I use them in different roles, right? As you already gathered, I use it to understand momentum. Very important too for me, the direction. So basically candles do appear almost at every single step of the road, whether I'm analyzing or I'm looking for triggers. Alrighty, so any follow-up questions? Now, regarding this week's webinars, we got tomorrow's strategy webinar. And if I remember correctly, I'm going to be taking a look at the time patterns a bit more. And Thursday, we're going to take a look at expected impact of the US president, if we know it by then. Probably yes. There are a few paths where basically there's a tie where all candidates do not get the majority of the electoral votes, do not reach the 270 mark. And in that case, you might be wondering what happens then. Apparently, the candidates that get electoral votes will be, basically there will be a vote in the House of Representatives, I believe, and the candidate with the most votes will be elected. So let's see, Thursday, if we know it or not. So if you have any questions, let me know. Maybe just a last look, for instance, on this piece to the upside on the euro yen. You know, the first moment that we might be worried, well, this candlestick pattern, right? A pin bar there. But if we wait for 2 bullish candles, that's this moment. 5 to 6 candles will be the same moment. That's when we might be a bit doubtful about the downside, and we might expect a correction or a bigger reversal to the upside. We get not a correction, but a reversal, in fact. That upside is temporarily halted here, but continues right there with the bullish engulfing twin right there. We got continuous upside until this moment, but yeah, we basically see one more last push. Then we get 2 bearish candles here and 5 to 6 candles here, and that's where we know that there's some correction going on or reversal. This turns out to be a correction, in fact, and that correction shows struggles here, 2 bullish candles, and here 5 to 6 candles. And this bullish candle signaling the most likely the turnaround, in fact, up to here where we have 2 bearish candles again. So this is, you can see how basically this is understanding swings. When do swings start? When do swings finish? So maybe I focused a bit more on that actually, Aaron, than you wanted to, but if we look at candles themselves within that piece, so that's looking at swings. If we look at candles themselves here, wick at the bottom, candle close near the high, that's could be a reversal candle. This is a strong continuation candle, and we did get continuation, right? Close near that low, sizable candle. All right, here we got some smaller candles, but they're in a sequence, and most of them are bullish. Engulfing twins here, bullish candle near the close near the high. Close near the high. Bearish engulfing twins, bearish candle near the low. Here, bullish candle, and we get the continuation, but we just face resistance and a turnaround after that. This is a bullish candle without follow through, right? And price goes sideways after that. But what it doesn't do is it doesn't break the low. It could break the low, by the way. It doesn't have to be, but so that's still a master candle. It's still, all candles after that are within that candle. Now, Nenet has rules for master candles. 2 to 4 candles break after that, so this is longer than that, longer than 2 to 4. So, you know, this is an area where these candles are bearish and bullish, but they're really small. What we can derive from that info is that these are small candles. Maybe not as important, therefore. Here there's a bit of a wick, and we do get some correction, but we get wick here too on the tops and dojis, so we still get one more push lower. So you can see how, you know, we can gain some info. This is actually a bearish candle and another bearish candle. But candles like this, where we have basically, you know, here's one example, but let me find another example. Here too. Hammers as a follow through of a strong candle. Those you have to be a bit more careful of, like these. This is a strong candle signal. But the candle after that is pretty small, and the close is just barely below the low. So that plus the time factor rule. But this was obviously definitely a bearish candle. This is a very good bullish candle. Sometimes candles will not give us much info. This candle right here, well, I don't think it's really a ton of info there. It's small, so probably doesn't really mean much. All right, two follow-up questions. Paul, regarding what I've spoken about, it could be good actually to look at the webinars that I talked about before. I've heard of one trader that uses time factor 2 the way I do, in the same way by coincidence. As far as I know, it was independent from each other, and he uses it in the same way. Now, so I don't see, my point is I don't see a lot of info out there on this topic of counting candles. And but candlesticks is something different. There was someone who asked Leon, actually, sorry, I forgot to address it. Do I recommend any books regarding candlesticks? And not at the top of my head, but what I can do is send you the name through email. I'll just have to look in my library. So if you're curious about that, just send me an email. There you go. Let me add a text box here. Anyone interested in materials regarding candlesticks, I should say, and time factor. All right. For those, let's see. I'm running a bit out of time here. Paul, if you're looking for time factor trading, you can go to YouTube. You can also write me an email, by the way, or you can go to YouTube and then go to Admiral Markets channel and then look for time factor here. There you go. See, and I will send it to you right now. That's the query for time factor. And you should be able to find something out there. But I think I have somewhere also 2 specific webinars I would like to share with you. So maybe better to send me an email if you don't mind. And Aussie dollar quick outlook. I think it looks bullish. As I said on Monday, I think the break here, there's space up in here above. It's a bullish formation, bullish short pattern. The break to the target could happen, and that's what happened. Exactly like that. Boom, we got the break to the target, then bounced. Looks like it's continuing at this moment. So I think it's a bullish environment at the moment. But with the news event, it's difficult. It could be a lot of volatility. I think for the moment, though, this is 6th candle and bullish. So on lower time frames, I think a bit of a hook back and continuation like this is probably the best. 6th candle on the 1-hour chart. So if we get any signs of weakness in here, it could be a bouncing spot. Look at this formation here. 5 to 6 candles not breaking this bottom. We got bullish candles 2 in a row. So on the lower time frame, I think it could be ready for push up. But news event around the corner, be aware of that. And that's something to be careful of. All right. So I need to push off now, folks. One last question. Do fractals complement the candle story or their own indicator? Yeah, they do. Fractals, you get basically a fractal with 2 candles not breaking the high or not breaking the low. So that's the first step, basically, what I was sometimes talking about, 2 bearish candles, for instance. But fractals also appear when they're not necessarily bearish, though. All right, so if you want any follow-up, don't feel free to use that email address. I have it somewhere here. And otherwise, hope to see you in the upcoming webinars. And safe trading above all. Don't forget the wacky kind of environment day that we're in today. And see you soon. Cheers.